Hello and a warm good morning. You tune into Market Cafe. I'm Ankita Saxena, and in the next half an hour, I'll take you through all of that transpired on the global front, the geopolitics, and a lot of cues to watch out for before the start of the street today. So without further ado, let's get going with how the Wall Street shaped up yesterday. Well, it was a mixed day of trade coming in. In fact, we did see some fresh attacks coming in. In fact, we had tension in the Middle East that ramped up again after U.S. forces launched a strike against Iran in response to the U.S. Downing of a U.S. Army Apache helicopter. Though Iran has not claimed, the attack, or has been no direct claim made by Iran, but this escalated tensions a tad bit, and on the back of that, we do see mixed day of trade coming in. In fact, the chip stocks continue their sell-off, dragging S&P 500 and Nasdaq Composite lower by 0.2% and almost 1% respectively. On the other hand, the Dow Jones was the one that was bucking the trend. Very marginal gains coming in, 0.1% uptick coming in as far as Dow Jones is concerned. So semiconductor stocks and the chip stocks saw a sell-off yesterday. We did see that happen on Friday as well, and then there was a bit of a comeback, that these stocks made, a bit of fresh buying coming in, and yesterday again we saw the sell-off come in. So that's how largely the Wall Street shaped up. But let's talk about crude oil as well. We did see crude oil that had in fact cooled off a bit because we do have U.S. Energy Secretary Chris Wright that came out and said that the ships from the Strait of Hormuz have increased, and they have increased meaningfully. And then after that, the oil flow has become better than what it was. And on the back of that, we did see a bit of a cool off come in on the oil prices. But nonetheless, as of now, if you look at the crude oil prices, we do see a bit of an uptick that's coming in on Brent. Percent uptick, 92.48 is where Brent crude is sitting at, and WTI sitting with an uptick of 1% at $89.14 a barrel. So that's where the oil is sitting at. It cooled off, and after that we saw a rebound coming in on the oil prices as of right now. But let's also talk about the gold prices and the other commodity basket. Despite the geopolitical concerns, gold has been on a downtrend, now trending near its 3-month lows, even as the dollar strengthens amid the safe haven demand. Investors are shying away from gold. Ashesha is now joining us to tell us exactly why.
Well, yes, so the spot gold is now trading at $4,200 an ounce. It is down 1.5% today. It is declining for the second consecutive day. And remember, gold ended nearly 5% lower last week as well. So that decline continues in this week's trading session. Let's also talk about the recent highs. Now, in this year, in calendar year 2026, month of January, gold prices were trading at about $5,400 an ounce, which means gold prices have cooled off nearly 23% since the start of the year. As far as the recent high is concerned, in the month of May itself, on 11th of May 2026, gold prices were trading at 4,736, which means from those levels, gold prices have declined nearly 11.5 to 12%. And several factors are aiding this decline, but one of the most important reasons is the fact that because of elevated inflation levels in the United States, Federal Reserve is expected to keep interest rates higher for longer, and this is a negative for low-yielding assets like gold, and that is the reason gold prices have been declining on a year-to-date basis, and the decline accelerated after the West Asia conflict broke out, and gold prices have been declining on account of expectations of higher inflation, and consequently the fact that Federal Reserve will have to keep interest rates higher for longer. Other than that, remember, yield have also remained elevated, and that is also a negative for gold prices. So yes, this is primarily the reason why gold prices have been declining. They are down nearly 11.5 to 12% from the recent highs that we saw in the month of May.
All right, so no takers for gold there, though safe haven demand has been seeing a bit of a shrinking there. But let's talk about the Asian market and how Asian market handover looks like at this point. We have a mixed day of trade coming in with only S&P ASX 200 that is trading in the green with gains of 0.4%. But rest of the Asian markets are in the red. Nikkei trading down 0.8%, 572-point cuts coming in on Nikkei. Hang Seng is also down 0.5%. Shanghai is also trading down 0.1%. An implied start in Nifty is also suggesting a negative start with cuts of more than 70-odd points. So a negative start, albeit very marginally in the red, is what we can pencil in for the Nifty. So that's how the start of the Indian market looks like. But let's About the US strike that has launched a retaliatory strike against Iran after an American Apache helicopter was brought down near the Strait of Hormuz. US Central Command described the operation as a proportional self-defense response to what it's called the Iranian aggression. The latest escalation threatens already fragile ceasefire efforts and further complicates ongoing negotiations over Iran's nuclear program and the reopening of Strait of Hormuz. Iran has vowed to respond, although it has not officially claimed responsibility for the helicopter incident. And private sector hiring in the US moderated slightly in the late May, with employers adding an average of about 29,000 jobs per week over the last 4 weeks ended May 23rd, according to the ADP's weekly tracker. While this marks a third consecutive week of easing job growth, the broader labor market remains rather resilient. ADP's monthly report showed private employers added 122,000 jobs in May, the strongest monthly gain ever since January 2025. And Anthropic has unveiled Claude, the Fable 5, a public-facing AI model with capabilities comparable to its highly restricted Mythos model that shook Wall Street earlier this year. The company says that the newly launched safety guardrails now allow broader deployment while restricting the responses in high-risk areas such as cybersecurity and biological threats. The launch comes as Anthropic looks to scale adoption and build momentum ahead of a potential blockbuster IPO. And SpaceX's record-breaking IPO is attracting massive investor interest, with demand reportedly crossing $250 billion against a planned $75 billion offering, making the issue nearly 4 times oversubscribed. Investors are betting not only on SpaceX's launch and Starlink's businesses, but also on its ambitious AI and space-based data center vision. The IPO is set to become the largest in history and could serve as a key gauge of investor appetite for the upcoming mega listing of Anthropic and AI. And the US is urging European countries to impose Ebola-related travel restrictions ahead of the FIFA World Cup amid concerns that the outbreak in the parts of Central Africa could spread internationally. Washington has already barred entry for non-citizens who have recently visited the Democratic Republic of Congo, Uganda or South Sudan, and is pressing allies to adopt similar measures. The move comes as millions of fans, athletes and tourists are expected to travel globally for the tournament. And Starlink's India launch plans have hit a fresh regulatory hurdle, according to the reports, with security agencies reportedly withholding final approvals amid concerns over the use of Starlink terminals during the Iran conflict. The delay comes just days after SpaceX's blockbuster IPO and underscores the geopolitical and the regulatory risks that are tied to Starlink's expansion strategy. India remains one of the world's largest untapped broadband markets, making the approval process critical for Starlink's long-term growth ambitions. And as Modi government completes 12 years, Times Network's Navika spoke to Union Minister Ashwini Vaishnaw on India's journey in the electronics manufacturing and export sector. Listen in to this exclusive interview.
Mr. Ashwini Vaishnaw, if I look at the sectors that you are at the helm of, if I look at electronics and IT, the semiconductor story and the smartphone story has been the truly global story where India has been competing with, global competitors. I want to ask you, how close are we to global powers in these sectors? What additionally are we planning to do over the next few years so that we are also seen as countries like Korea, Japan or Taiwan, where tech exports and the tech sector really accounts for a large part of being the engine of their economy?
I would like to say that the beginning that we have made, whether it is semiconductors, whether it is electronics manufacturing, mobile phone manufacturing, whether it is component manufacturing, a very significant base has been created over the last decade. There is a long way to go. A lot of effort has to be put in, but the results are visible. For example, in 2025, the single biggest exported category was mobile phones. Now compare that to the past many decades, it has been high-speed diesel, which is basically refined. Then the gems and jewelry, Then it has been textiles or engineered goods, garments. These have been traditionally the topmost exported goods. Last year, electronics, the mobile phone as a single HSN code became the single biggest exported product. And electronics has now become among the top 3 exported as a category. Now, this is something which was unthinkable even a decade back, because over a period of time, the manufacturing sector was not only neglected, it was also kind of suppressed by the policies from 1950 to 1990 onwards. Things did change in 1990. From 1990 to 2004, if we look at that time frame, those 14 years, a lot of opening up happened, a lot of entrepreneurial energy came out. People started looking at manufacturing in a different way. Then 4 to 14, another phase came where it became ultra left kind of policy framework, and whatever gains we made in 90 to 2004 were kind of lost or suppressed during that time frame.
And well, in an exclusive interview with ET Now, powerhouse performer Manoj Bajpayee sheds light on his role as RBI governor in the economic thriller Governor. Let's listen into the slice of that conversation.
This one actually involved something else, a subject which I was not good at. Right. And I can say it confidently that 80% of the populations are not good at. Right. So I have no shame in accepting it. From the GDP to fiscal deficit to payment of balance, all of the datas and the numbers, when you are speaking, it has to be convincing. Right. For that to be convincing, you have to understand exactly what you mean by those lines and those numbers and those terms. So earlier in the day, people used to go to the experts, people used to go to find books and spending a lot of time reading a whole book and finding, say, a little bit of material in one book. But now Google and or other apps, yeah, all of them have loads of information about it. You just have to have patience to go through those pages.
And on to a little programming note then. For 17 years, ET Now has empowered investors and decision makers with the insights needed to navigate India's growth story. Continuing the commitment, we bring to you ET Now Market Summit 2026, a gathering of India's leading economists, fund managers, policy makers and investment experts, including the likes of Sunil Singhania, Sandeep Tandon, Sandeep Sikka, Rhythm Desai and Vijay Kedia. They will be coming together to decode the future of Indian markets, a special event where SEBI Chairman Tuhin Kanta Pandey will be the chief guest and share his insights on navigating volatility. Stay tuned to ET Now on 12th June for exclusive insights and powerful conversations from ET Now Market Summit 2026. Welcome back. Stay tuned into Market Cafe. We're getting you all the cues you need to watch out for before the start of D Street. And for now, Darshita is joining us with all the stocks that will remain in focus in today's trading session. Over to you, Darshita.
Right, here are some stocks that could remain in focus on the back of key corporate developments, and starting off with Dixon Technologies, where the company has entered a joint venture with Tech Technologies, with Dixon holding a 60% stake. Now, this JV will manufacture optical transceivers with telecom equipment and further strengthening Dixon's electronics manufacturing ecosystem. Moving on, Bluestone Jewelry saw strong institutional activity, with Nippon India Mutual Fund acquired a 1.64% stake, with early investors including IVCap, ACIL and 361 Fund paired their holdings. The buying interest from the institutions could be viewed positively. Emcure Pharmaceuticals has also witnessed a large block deal, with BC Investments selling a 1.89% stake worth around 612 crore, which, however, the stake was fully absorbed by Kotak Mahindra Mutual Fund, resulting in no meaningful change in the ownership. Another stock in focus is Hinduja Global Solutions, which has launched Project Ganga to provide high-speed broadband connectivity to more than 20 lakh homes in Uttar Pradesh over the next 2 to 3 years. Quality Power has announced the acquisition of Win-Win Specialty Installators for worth rupees 315 crore, while NTPC Green Energy subsidiary will develop a 250 megawatt solar project with battery storage for defense establishments. And finally, lock-in periods are ending today for ICICI Prudential, AMC, Meesho and Suraksha Diagnostics, which could increase the tradable float in these stocks.
All right, Darshita, thank you for joining us with all the stocks in focus. Afcons Infra is another one that will be in focus as it has secured a 5,000 crore contract from Vadhan Port to construct a breakwater at the upcoming port in Maharashtra. The project alone is equivalent to about 44% of Afcons FY26 revenue and will create the world's second largest breakwater upon completion. Rabinder is now joining us with the details of this order win.
Well, as Afcons Infrastructure can be in focus, the company has received a LOA from Vadhavan Port Project Limited for the construction of 10.14 kilometer long breakwater in the upcoming Vadhavan Port, and the project is valued at 5,301 crore, which is equivalent to nearly 44% of the company's FY26 annual revenue, making it one of the most significant domestic order wins in the recent months. And upon completion, the breakwater will become the second largest breakwater in the world, highlighting the scale and complexity of the project. And the contract is a critical component of the Vadhavan Port development, which is expected to emerge as one of the India's largest deep draft ports and a major logistic and a trade hub. And the order further strengthens Afcons Infrastructure leadership position in the marine and port infrastructure segment, while significantly enhancing its already robust order book. And the project also aligns with the India broader maritime infrastructure development strategy and provides long-term execution visibility. And this is the third major order announcement of Afcons Infrastructure in Q1 of FY25 so far. And in April, the company has secured a EPC order worth of rupees 373 crore. And subsequently, on May 2026, Afcons Infra has marked its entry in the European market by winning a major railway project in Croatia valued at approximately 7,544 crore. And with these wins, Afcons has secured worth of order rupees 13,224 crore so far in Q1 of FY27. And as of 31st March 2026, total order book is 32,496 crore, and management has guided for a fresh order inflow of rupees 30,000 crore for the FY27 and plans a capex of 725 crore. And the company expects a sizable reduction in debt in FY27 and is targeting a reduction in the working capital days to 120 days. And management also expect approximately 1,000 crore of receivable to be unlocked by June, which will further strengthen company's cash flow and improve the balance sheet. So back of this major order win, Afcons Infrastructure can be in focus.
All right, Afcons Infrastructure in focus in the back of that big order win. But let's move on to Ajanta Pharma, that is in focus as the promoter entities offloaded shares worth more than 1,000 crore rupees via a block deal. The shares changed hands at an average price of 2,968 rupees a piece. My colleague Meryl is now joining us with the details of this big. Mitali is now joining us with the details of this block deal. Over to you, Mitali.
Right, so Ajanta Pharma, that stock will be in focus in today's trading session after the company has witnessed a promoter stake deal worth rupees 1,024 odd crore rupees, and now the Ravi Agarwal Trust, which is one of the key promoter entities, they have sold nearly 34.5 lakh shares of the company through a block deal, raising approximately 1,024 odd crore rupees, and the shares changed hands at 2,968 rupees per share, resulting in the trust reducing its stake from around 13% earlier to now 10.24%. On the buying side, institutional investors were quick to step in, and out of that 34.5 lakh shares, Kotak Mahindra Mutual Fund acquired 25 lakh odd shares in the company, while Aditya Birla Sun Life Mutual Fund purchased 13 lakh shares of the company, both at the same transaction price. Now, this deal is actually important because it comes from a promoter group that still contributes and owns nearly 66 to 67% stake in the company. Even after the sale, promoter ownership, it remains constantly above the 63% mark, indicating that control of the company, it remains firmly with the promoter group. But actually, this is not the first time that promoters have sold their stake. It was back in December 2022, where Ravi Agarwal Trust and Ayush Agarwal Trust together sold a stake of around 4.3% for nearly 637 odd crores, and that transaction took place at a rate of 1160 rupees per piece. Fast forward to today, and the latest block deal has happened at rupees 2968. If you see, the transaction price is more than doubled in 2026. So in simple terms, if you see, some promoters have been selling lesser stock but for significantly more money. But a cautious stance for the company is also about the pledged shares. So Ayush Agarwal Trust, which owns nearly 11.3% of the company, has already pledged shares equivalent to 6.5%. And as of December 25, overall promoter share encumbrance stood at 17.29%, meaning a meaningful promotion of promoter holding. So overall, positive as well as a negative trigger for the stock.
All right, Mitali, thank you so much for joining us. But with that, it's time to pull down the curtains on this edition of Market Cafe. I'll take your leave. Thank you so much for tuning in. Don't go anywhere. The market is coming up next.